Hey, it's Clay, and this will be a video chart on ticker symbol DRUS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame, and it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I did this analysis the past couple of days, and we've been tracking this overall symmetrical triangle, wedge, pennant pattern, whatever you want to call it. But good and bad news. The bad news is, well, the bears won out, and the bears won out via, well, they got the break to the downside of the pattern, and you can see right there the price is now down below, that trend line. The good news, however, is this could very well just be a fake breakout, or I should say a fake breakdown. If you've traded long enough, then have you ever bought a breakout that you think's a breakout, and then all of a sudden it's not actually a breakout? Well, that happens all the time. And the reason I say it could very well be a fake breakdown is that there really wasn't any sort of emphasis behind it. I mean, and if you, again, this means a little bit more to those of you that have traded long enough and used charts, but if you have, then you've seen pattern breakdowns. And after those, the breakdown happens, it is just the floodgates opened and it's peace out, see you later. But that didn't happen at all. I mean, the price, yeah, broke below that trend line, but then it just essentially went sideways. So yes, technically speaking, it did break down, but peeling back the layers of context, was it really that strong of a breakdown? I would say no. Now, I'm also not sitting here guaranteeing that this thing is for sure rocketing back up to 0.013. I'm just saying that anybody out there that's saying, uh-oh, it's a breakdown, it's game over. Yeah, breakdown, that's true, but that's kind of, you got to dig a little bit deeper. And the whole digging deeper part is literally, I mean, there's really no better way to put it than the price just went sideways. So yes, a breakdown, but just not a very strong one. So we'll see if the bulls can kind of get things back on track. What does quote unquote back on track mean? Well, the easiest way to kind of quantify that is let's see if the price can get back up above that purple line there. That is the famous 50-period simple moving average. And even if you have a surface deep understanding of charts, I'm sure you're well aware of the 50-period, and you know that when the price is below it, it does tend to act as resistance. But if the price can get back up above that purple line, then I would say that would be confirmation that, this trend line breakdown was indeed just a faulty breakdown, and there wasn't actually any sort of true bearish power behind it. So we'll see what happens next week. But yeah, the sooner the price can get back up above that purple line, that would be better for the overall quote-unquote story of the chart. So next week should be pretty interesting. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.